It's Thursday, the 20th of October, just about at 20 to 9, and we are on the FTSE 100. So the FTSE this morning has just drifted down into the identified zone right here, which is 7,010 down to sort of the 7,000 level. Basically, got a buy signal at 8:15, and I've just been triggered into this long position. Analysis on this market this morning was this zone up here and this zone up here are key today. So essentially, whichever way the market breaks is where we're going to get the direction for the FTSE now. So if we break below, start trading below, then I'm expecting more to come off of the FTSE. We can look at that on the daily time frame after. If we break back above these levels, then the FTSE is once again turning positive and making an attempt at those all-time highs once again. But for me, the market just drifted down. No real strong bearish sentiment in this drift down into the zone. Got the buy signal at 8:15. Entered into the trade. I'm just going to be watching up toward these levels up here. Just up here. As or if the market pops up here, just want to watch for reactions up here. I may exit for a small profit, but looking to take the market up into the zone above. Okay, so all I'm going to do with the live trade is what I always do. I will talk you through any points in the trade where I'm managing the trade. I'll talk you through anything I am looking at, depending on what the market does. And apart from that, I'll just pause the video and cut it down so I can keep it relatively short. So the market is not really doing anything at all. It's just drifting sideways. Even after the ATM open, the movement in the FTSE was very, very slow. And basically, we have the ECB rate decision today at 12:45. It's very likely that is the reason for the market moving so slowly. On days where you're going to have big news releases, certainly rate decisions and also non-farm payroll tends to be the same. Quite often you can see the market doing this, just moving very, very slowly. Traders just sit on their hands and they wait for that decision before they start getting into the market. So you can just see the market drifting on days like this. Target still remains the same, up toward the above zone. Currently the price action is just sitting on the identified support level that was the reason for me entering the trade. And the only thing is, if the market does just drift sideways for a number of hours, certainly up towards the news release, I will just come out of this trade. I don't want to be stuck in the trade during the rate decision. The reason for that is, on 80% of times, the decision will come out, it will be exactly as expected. The market may just make a small movement and nothing will happen. But on the days where something unexpected happens, you can see wild spikes in the price action. During those times, your stop can be completely ineffective. You can suffer slippage, and basically you can end up really damaging your account. I know lots of people trade around the news. For me, I would never touch it without a guaranteed stop. Reason for that is, when I was first learning to trade, I read a lot of traders who suggested trading the news. I did it, and I got stung by it. It was actually on the Australian dollar, US dollar. I had my stop in place. I was in the trade. I was around about 10 to 15 points in profit. The news release was just coming out, so I thought, I'm going to stay in this. I'm just going to tighten my stop a little bit, which I did. The news release came out, the market reversed, absolutely plummeted in a matter of seconds. My stop, it didn't do anything at all. It just may as well not have been there. I went from being plus 10 to minus, it was either 50 or 60, and that's where the market triggered me out of the trade. For me, that was more than enough experience with trading the news. If that can happen once, it can happen again, and it can happen a lot worse. If you look at the Swiss franc on the daily time frame, you can see the absolute nosedive that took on the charts. Lots of people were trying to trade that news release, and lots of people were on the wrong side of it. Lots of very long-term traders ended up wiping out their accounts and are no longer trading because of it. For me, it's not worth risking your entire trading career, your entire trading account, for the sake of fast money. When really, um, what is likely going to happen eventually is you're going to suffer some serious damage to your account. Okay, so that's what I'm looking at. The analysis remains the same, just looking for this market to come up into the above zone, watching round about these levels, 7018 or 7019 to 7020, just back toward an overnight level of highs, which I'll take you over once the trade completes one way or the other. Okay, so the market is finally starting to move once again. And you can see we've just sort of drifted along, not really done anything, and we're just starting to break up into this management point up here. Now, when you're trading on lower time frames like this, if you do get caught into a trade that lasts for a very long time, you don't need to sit and screen watch. For me, all I do is set an alarm. I'll set an alarm down here, and then I set an alarm up here. All that means is whilst the market is drifting and chopping, I don't really need to pay much attention to it. But if it starts to break down, I want to come back and watch and start managing the trade. If it starts breaking up, I want to come back and start managing the trade. Setting those alarms, it protects you in the trade so that you're not going to miss anything, but it means that you don't have to just sit and screen watch. So for me, I just answer emails, work on other things. Also, one of the reasons for it is if you are just sitting screen watching, it's very easy to convince yourself that you're seeing something that isn't actually there. So if you're just sitting watching the screen and you see the market, pinning down like this over and over again, you can convince yourself that this means the market is about to plummet. Where all you really want to be paying attention to are the key areas that you've already decided to watch. So your management point, which for me is just up here. And also if the market starts to break down strongly, clearly, that's when you'd want to start looking at the market, seeing if you are getting signals that your trade is incorrect. And so setting alarms like that can be very beneficial. You can do it on all time frames, to be honest, even if you're trading higher time frames. When you enter the trade, you just set your alarms at the 2 points, at the point where the market would be moving against you enough that you'd start to watch the trade, and at the point where in the positive you'd be looking to start managing your trade, bring your stop to break even, close partial profits, or take full profits, whatever it may be. So just watching the market now, I am still expecting it to pop up a little bit. It's going to be a relatively small trade just because the market has been moving very, very slowly. Anywhere from 8 to 12 points, I'll be happy to close this one out. Rate decision is at 12:45. I'll likely just call it a day after this trade. So we've reached the management point and had a very, very small pullback from that level. As expected, I was expecting some sort of a reaction. The bearish reaction has not been overly strong. I'm happy to maintain the trade at this point. Price action is just moving incredibly slow. We're at 10:30 now. I'm just watching the trade, seeing how it develops. I've had the little pullback as expected. Now just looking to see if the market can push up once again. So the market has just spiked up into the zone, round about 8 points. You can see the market is just pausing at the 7.7 points for, let me just close that out. Okay, so the market is pushing up. You can see it's resting on exact levels for a number of seconds at a time. It's just another little clue that the market is low volatility and is not moving as normal. So I've closed it out 8 points. For me, anything less than 10 points, I just really look at it as a sort of scalping move. I was looking at the market as it came up into these levels here. You can see why. You can see the congestion back here in the overnight trading, back here also. and then this morning we came down, dropped below, popped back up, used this level, and then fell away. So as the market got to here, I began to manage the trade. I was looking for strong rejection to come into the trade. Excuse me, if that came in, I would have just exited. We had some small selling pressure, but nothing significant. Okay, so if we look on the daily time frame now. So basically, the market was sitting in these key levels down here. For me, really, the market between this level and between this level is much more neutral. It needs to break through the level here to turn negative, and it needs to break through the level above to turn positive. Currently where we are, we've had a sell-off, we've tried to break up, you can see we've spiked up, and currently we are back at these highs. So for me, these are important levels for the shorter term trend. Breaking above, I'd expect more bullish action to come into the market. Then breaking below these levels, I'd expect more bearish action to come into the market. So for me this morning, at these levels, I was looking for the buy position. Took a very, very long time to complete. As mentioned, the ECB rate decision is coming out at 12:45. For me, as soon as we got up there into the 8 points, because of the way the market's acting, and also because it's a profit target, I was happy to take that as trade complete. I've also got my dog staring at me, looking very miserable. She wants to go out on a walk. So 20 past 11, done for the trading day. I'll just step away from the markets now with the rate decision coming up and with me already having a good trade completed. Okay guys, hopefully that was helpful. As always, I'm James Orr, and thank you.